Good Thursday morning and welcome once again to Washington, D.C. I'm Tyler Suiters. You are watching live continuing coverage of the National Energy Summit brought to you by the Council on Competitiveness. This is day 2 of the two-day summit. The program gets underway today at the top of the hour, 8 o'clock Eastern. Today's topic is international dialogue. To that end, we have a host of international guests and speakers on the agenda today. Again, that begins at the top of the hour, but joining me right now is a familiar face, albeit in an unfamiliar location. Elliott Gue, the editor of the Energy Strategist, is with us now. We're talking, Elliott, oil inventories, natural gas inventories, maybe even G20 if we have time. But let's start with your analysis of what we heard yesterday regarding oil inventories, the build, and the subsequent drop in oil prices.
Right. I mean, we saw a build in a larger than expected build in oil and gasoline and distillate inventories. Just all across the board, it was a very bearish report. It wasn't a total shock because we had the API numbers the day before, which looked to be much bigger build than expected, but enough to shock the market into declining significantly.
Now, there was a brief reaction to the news that China's demand dropped off over the last month. Was it shorter than you expected, or did you think it would have a more lasting effect considering the size of this consumer and the size of the subsequent drop?
Well, I mean, China is an interesting thing because you never know exactly what their demand is, because they have been building their stockpiles of oil. They have a strategic reserve they're trying to build up, similar to our strategic petroleum reserve. Mm-hmm. So you never know when they're just building stockpiles for that or whether it's actual demand. I do think the Chinese economy is growing quite quickly, so I think that over the next 6 months, generally, we're going to see pretty strong demand in China. I think we're probably starting to see year-over-year growth in Chinese demand. Actually, in the U.S. numbers yesterday, what wasn't looked at a whole lot was we actually saw a little bit of demand growth across the board in the United States over the last 4 weeks compared to the same period a year ago. Another sign that the recession is potentially coming to an end for us. Is, in your mind, Elliott, natural gas still the story right now? I think it is. Especially yesterday, if you look at natural gas prices versus oil prices, oil was down big drop, the largest drop we've seen in weeks. But natural gas actually traded higher during the session. It's obviously had a huge run off its lows just a few weeks ago. And we've seen the last 3 reports, we've seen a smaller than expected build in inventories for the last 3 weeks straight. Well, that's what I wanted to touch on next, is the fact that the EIA is issuing its report coming up in just a few hours, as it always does on Thursdays. Are you anticipating another smaller than expected build? I think it's very possible. I think the consensus right now is about 68 billion cubic feet. Mm-hmm. I do think it might come in a little bit under that. We just started to see that pattern. Actually, if you look at the data going back to the beginning of August, the total build in inventories in August this year was actually a little bit less than last year, which is interesting when you consider that this was a cooler summer generally than the summer of 2008. I think it's starting to suggest that we're seeing probably somewhat of an uptick in demand, which is consistent with the manufacturing numbers we've had over the last couple of months. Positive numbers, which indicates that maybe industrial demand is coming back. We obviously have seen some fuel switching where companies that might be generating electricity normally with coal are switching to natural gas because of the lower prices. And I also think that you're starting to see the beginnings of that production drop off. Year over year, the rig count is still down something like 55%. And I think that's starting to filter through into lower production. Even with a smaller build and week after week of smaller builds, we're building nonetheless, and that means inching closer and closer to capacity for storage or peak storage. You're still thinking 3.9 is right around the total, correct? Right. I mean, there's no exact number, and nobody really knows for sure what the exact number is. Just guesswork and speculation. It's totally guesswork, but that's sort of the number out there. You hear as high as maybe 4. You hear 3.85, but it's somewhere around 3.9, I believe. Mm-hmm, mm-hmm. Where do prices go from here? Let me rephrase that. When do we hit $4? Right. I'm a little concerned only between now and the end of the injection season, which is basically early November. We could see a lot of volatility because, as we approach that full storage level, there's still a lot of concern about shut-ins for the natural gas industry. In other words, them having to shut down wells because there's simply nowhere to put the gas. Right. After that, I think it's a function of winter weather. But if we don't have a really warm winter, if we have sort of a normal winter or even a slightly warmer than normal winter, I think you could easily see natural gas prices hit $6 early in the coming year.
Well, another factor weather-wise, Elliott, we're closing in on the end of hurricane season.
We are.
To some degree, or at least we're ending September. Nothing major whatsoever in the Atlantic or the Gulf.
No, not at all. And I think that was largely expected. We had an El Nino develop. We have an El Nino still, but it started developing several months ago. Typically, when you have an El Nino that's sort of moderate to strong, you see a very weak Atlantic hurricane season. So I think that was pretty much expected. Year over year, obviously, the numbers are kind of hard to compare because, a year ago we had a couple of storms in the Gulf that really had a major effect in terms of natural gas shut-ins. But still, those numbers are coming in for September are coming in pretty strong in the sense we're not seeing as large a build as normal. So again, I think that's evidence that maybe we are seeing the beginnings of an uptick in demand and decline in production.
Let's shift gears a little bit, Elliott. The G20 is now underway this morning in Pittsburgh.
Yes.
Susan McGinnis is leading our team coverage there. She'll be joining us a little later this morning. You are a veteran of G8 summits in the past,
yes.
And it seems that in no time in recent memory has an international meeting among specific leaders of these countries focused so much on climate. Is that an effect of the road to Copenhagen coming to a close?
I think so. I think that that's just a few months away, and there's a lot of speculation whether there'll be a U.S. climate deal before then, or if it'll be moved along by that time. But I think it's going to be a very difficult agreement to come up with because of the basic problem where you have the developing world. That are sort of saying, that they're obviously going to have to see a big increase in their carbon emissions in the near term because they're developing very quickly. Their power demand is growing very rapidly, and they're extremely dependent on coal. There's really no way for them to wean themselves off coal short term. And at the same time, the developed countries are trying to get some sort of a specific target or a specific deal. So I think that's a very difficult problem to overcome. I think you're going to end up seeing, just like you did at the G8, a lot of rhetoric, a lot of talk, but not a whole lot of...
That's a given when you're getting world leaders together.
Well, that's true. But I don't think you're going to see any specific targets. It's going to be very difficult to strike a realistic deal.
Who are the players in your mind, Elliott? Clearly it's the U.S. and China that need to come to some sort of agreement, either behind the scenes or in front of the cameras. Several members of the EU are stepping forward, trying to broker a deal, or, on the other hand, play bad cop and put pressure on the U.S. Who else outside of the two world's leading polluters are at the forefront here in these discussions?
Well, I think it's, you have India as well is a big player. It doesn't get as much attention or press as China, but if you look at India, again, a very fast-growing economy, extremely dependent on coal. In fact, I was reading the other day some comments from CEO of Peabody Energy, which is a big coal company, and they're saying they expect India to be the world's fastest-growing importer of coal over the next few years. So I think they're a major player. Really, all your developing countries, because you remember, in the early stages of a country's development, the economy is a lot heavier. It's more focused on heavy industry, and therefore, tends to be a lot more carbon intensive than, say, a fully developed economy.
When you say heavy industry, you mean specifically manufacturing?
Manufacturing, or a country like Brazil, they're very much based on, say, the energy industry, the agricultural industry.
High production.
Right, exactly. And so they're a little bit more dependent on carbon for growth than, say, the United States or many of the European countries. And if you look at a country like France, for example, they have so much nuclear power. They're already very carbon efficient. Even though China is building out nuclear power very, very, very aggressively and has plans to build a number of new plants, dozens of new plants, it's still only going to be a very small percentage of their total power supply, say 20 years from now. It's growing, but it may only grow from a couple percent to 4 or 5%. It's very difficult for them to actually make a dent in their carbon emissions.
Well, that's an interesting aspect of the international discussion on a post-Kyoto climate treaty. The fact that China is alternately pointed to as the world's biggest polluter and a coal plant every week, I believe, is the official equation in terms of new generation there. On the other hand, you're now getting a sector of the international community that is pointing to China as a stick for the U.S., saying, look what China is promising. They are moving to a low-carbon standard, essentially. Which story is it? Or which is a bigger story?
I think it's both. If you look, for example, a couple weeks ago, I guess they announced they were building the largest solar plant in the world, this 2-gigawatt plant, which is being built by First Solar. And
they're planning the largest wind field in the world as well.
Absolutely, but you look at 2 gigawatts, and then you look at the size of China's total capacity, and it's really a drop in the bucket, and that's going to take 10 years to complete that plant. So, you know, they are making steps and they're making moves, but I think people underappreciate how much growth there is in China in terms of their demand and how big the economy is in terms of how much energy they need.
You spent a great deal, including some of your university years, in Europe, specifically in England. It seems that Tony Blair especially stepped to the forefront of this climate negotiations. Very quickly, Elliott, what is the role of Great Britain in this? Is it the great mediator for the U.S.?
Well, you know, Britain's an interesting case as well. They've been one of at the forefront of sort of reducing their own carbon emissions, and the way they did it was by using more natural gas. Now they're sort of running out of natural gas in the North Sea, or they're seeing declining production. But they've been very good about stepping forward and coming up with, you know, revitalizing their nuclear industry. You know, 10 years ago, you probably would have seen 75% of people in Britain saying they don't want more nuclear power plants, and now, you know, public opinion has really shifted. So I think they are an interesting example for the rest of the world.
Our Thursday morning regular, Elliott Gue with the Energy Strategist. Always good to have you with us, Elliott.
Nice to be here. Thank you.